Most traders don't blow up their account on the first trade, they do it on the 10th. Because by then, the small wins have tricked them into thinking they're invincible. That's the dangerous part. It isn't the first loss that wipes you out, it's the slow confidence creep that convinces you the rules don't apply anymore. I've seen it play out in retail traders again and again. They start with discipline. But after a few lucky streaks, the plan feels unnecessary. The position sizes grow, the stops disappear, the trade becomes a bet. And that's when the account takes its final breath. Here's the real question. If most retail traders know the stats, that over 90% lose in the long run, why do they keep falling into the same trap? I've watched it happen up close. A retail trader starts with 5 grand. The first trade works, the second works. By trade number 4, he's convinced he has a system. He doesn't. He has a string of randomness dressed up as skill. But, because the account is growing, the brain tells him it's proof he's special. So now, the inner dialogue shifts. I'm onto something. I should size up. Why not double down? And when the inevitable losing streak arrives, it doesn't feel like bad luck. It feels personal. That's when panic and pride start fighting in the same mind. One voice says, cut the loss. The other whispers, just one more trade and you'll get it back. That whisper has destroyed more accounts than any market crash in history. Now, some traders survive that moment. Most don't. Because when emotions take the wheel, discipline gets shoved into the trunk. And once you're trading to prove something instead of trading to protect something, it's only a matter of time. Here's where I want you to pause. Because this pattern isn't random, it's a cycle. A predictable psychological loop that I've seen in almost every new trader. And on the other side of that loop, a completely different mindset. A way of approaching markets where the goal isn't chasing the big score, it's staying in the game long enough to let your edge compound. That's the difference between the traders who burn out fast and the ones who build real wealth. And that difference isn't talent, it isn't IQ, it isn't even timing, it's mindset. Stay with me, because in the next few minutes, I'm going to walk you through that shift. The exact split between how most traders think and how the rich traders think. And once you see it, you won't be able to unsee it. And that's exactly why I built Zenstock. To give you a place where trading isn't about hype, it's about clarity. My name is Ben, and welcome to Zenstock, where trading meets clarity. Here we focus on mastering your mindset as much as your charts. You'll learn to think differently, manage risk, and trade with calm confidence. Because in the market, your greatest edge is you. This content is for education and entertainment only. It's not financial advice. Always do your own research before trading. Before we dive in, take a deep breath, clear your mind. For the next few minutes, give your trading psychology your full attention. Early in my career, I came across a book that put words to what I had been watching play out in real time. It's called New Trader, Rich Trader by Steve Burns. In it, Burns lays out a simple contrast. New traders chase excitement, rich traders chase consistency. New traders trade from emotion. Rich traders follow a plan. One group is constantly reacting, the other is patiently waiting. What struck me wasn't the theory, it was how much of it I could see in the retail traders I was mentoring. Almost line by line, it matched their behavior. The rush to trade bigger after a win. The stress when a position went red. The temptation to hold on too long because they just knew it would come back. It made me realize something I'll share with you today. These aren't isolated mistakes. They're predictable stages most traders go through. And the only way to escape them is to consciously step into a different mindset, the mindset Burns calls rich trader. That's the shift I want to unpack with you. And I'll start by telling you a story of my own. I remember chatting on Discord with a retail trader who was convinced he'd cracked the code. He'd just strung together a handful of winning trades, and his confidence was through the roof. He kept telling me, "This is it. I finally found my edge." But the edge wasn't a system. It was a string of randomness dressed up as skill. And I could hear in the way he typed, the bigger bets were coming. Sure enough, within a week he was doubling position sizes. Then he started holding losers longer, waiting for a miracle bounce. And by the end of the month, the account that once looked promising was down nearly 30%. When I asked why he didn't stick to his rules, his response was brutally honest. "I just knew it was going to work this time. That's not strategy talking, that's ego. That's identity fused with a ticker symbol. And when your self-worth is riding on whether a stock goes up or down, you've already lost control. Here's the part I want you to notice. This trader wasn't stupid. He wasn't reckless on day one. He was just human. And humans are terrible at dealing with randomness, especially when money is involved. But once he recognized the pattern, he had a chance. He could start pulling his decisions away from his emotions. He could start thinking like the rich trader Burns describes, instead of repeating the same painful cycle. That's the fork in the road every trader eventually faces. One path feels exciting but ends in burnout. The other feels boring but leads to freedom. Which one you choose depends on whether you let your mind trade the market or make your system do it for you. And that's exactly what today's topic is about. How psychology shapes your results far more than strategy ever will. But before we dive deeper, I need to be clear about something important. And that's exactly what today's topic is about. How psychology shapes your results far more than strategy ever will. Most traders think they need the perfect system. What they really need is a way to keep their brain from sabotaging the system they already have. That's the part most people never prepare for. Because it's easier to download indicators or chase signals than it is to sit with your own decision-making flaws. But the truth is, your psychology is the hidden variable that decides whether you make it or not. And let me be clear here, nothing I share is a guarantee of profits. This isn't financial advice. This is about mindset. It's about how to survive long enough to let your edge compound instead of blowing up in the heat of the moment. So as we move forward, I want you to listen less like you're searching for the next hot tip and more like you're building a mental framework. Because the difference between new traders and rich traders isn't their entry signals, it's how they think when everything's on the line. So if you only take one thing from this entire talk, let it be this. In trading, your mindset is the engine. Your strategy is just the vehicle. A Ferrari with no gas doesn't move. And a disciplined trader, with even a simple system, can go farther than an impulsive trader driving the fanciest setup in the world. That's the lens I want you to hold as we dive deeper. Because every lesson we cover from here on out ties back to that single truth. The market doesn't just test your strategy, it tests you. Most traders can't sit still. They feel like if they're not clicking buttons, they're falling behind. I've lost count of how many times I've watched retail traders open a trade just because the chart was moving, no signal, no setup, just FOMO disguised as intuition. But here's the trap. When you chase action, you're not trading, you're gambling. You're feeding the need for excitement, not the need for consistency. And the market has an expensive way of teaching that lesson. Burns captured it perfectly in New Trader, Rich Trader. New traders are impatient and crave constant action, while rich traders wait for buy signals. That line hit me because I've seen it over and over. I remember one trader who messaged me after scalping penny stocks all morning. He said, "I feel alive when I'm in a trade." But by the afternoon, his account was down 15%. He wasn't alive, he was bleeding out from 1,000 paper cuts. Contrast that with a trader I worked with who used a simple moving average system. She sometimes went days without a single trade. She told me it was boring. But when her signal finally triggered, she sized in calmly and rode the trend. 3 trades in a month. 2 small losses, 1 big win. Account green. This is where psychology makes or breaks you. Impatience is wired into us. Dopamine wants action now. But patience is where compounding lives. The Journal of Behavioral Finance once found that traders who traded less frequently outperformed active traders by an average of 5% annually. Not because their systems were better, but because they gave their systems space to work. So ask yourself this: are you trading to feel alive, or are you trading to be profitable? Because one of those paths ends in exhaustion, and the other ends in freedom. And if impatience is the first trap, then the second is what happens when the waiting finally ends and stress takes over. Most traders think stress comes from the market. It doesn't. It comes from the gap between what you plan to do and what you actually do. I've watched retail traders freeze the moment a trade went red. The chart dipped a little, their heart rate spiked, and suddenly they were glued to the screen like their entire future depended on the next tick. But the real issue wasn't the dip. It was that they had no clear plan for what to do if it happened. Burns put it simply, new traders let stress drive their decisions, while rich traders reduce unknowns and trade smaller until they have confidence in their system. And he's right, stress shrinks the moment you know your maximum loss before you click buy. I had one friend who used to size way too big on every position. The guy would literally sweat through his shirt during earnings season. He called it the thrill. But what he really had was a heart attack waiting to happen. When he finally cut his position sizes in half, he told me trading suddenly felt boring, and boring, he realized, was profitable. Behavioral research backs this up. A study in Frontiers in Psychology tracked traders' stress responses through cortisol levels. They found elevated stress led to riskier, more impulsive trades, often doubling loss rates compared to low-stress states. In other words, the more your body panics, the worse your decisions become. So here's the takeaway. Stress isn't a signal from the market. It's a signal from your system, telling you something's wrong with your risk, your size, or your plan. Fix those, and the stress fades. And once stress is out of the driver's seat, the next trap shows up. It's the gambler's instinct that whispers, "Go bigger. Bet it all." Every trader I've ever met has faced the temptation to go all in. It usually happens right after a big win, when the voice in your head says, "If I just size up this once, I can change everything." But that voice isn't logic. It's gambling psychology dressed up in market language. Burns warned about this too. New traders bet the farm, while rich traders carefully control trade size and make risk their number one priority. That line sticks with me, because I've seen too many retail traders wipe out years of progress with one oversized bet. One guy I mentored turned a small account into 15,000 in just a few weeks trading options. He felt unstoppable. So when earnings season rolled around, he threw the entire account into one high-risk trade. The stock gapped against him overnight, and by the opening bell, it was gone. Months of grinding. One click. Zero balance. He told me later, if I'd just stuck to my plan, I'd still be in the game. And that's the truth, because the game isn't about winning fast, it's about not losing everything before your edge plays out. The research backs this up too. Studies on trader behavior show that the most consistent outperformers risk no more than 1 to 2% of capital per trade. Not because they're timid, but because they know survival is the only path to compounding. Here's how I frame it for myself. Trading is like poker. The best players don't win every hand. They protect their stack so they're still sitting at the table when the odds finally swing their way. That's risk management, playing the long game while everyone else chases a lucky hand. So let me ask you, are you trying to prove yourself right in one trade, or are you trying to stay solvent for 1,000? Because only one of those approaches gives you a shot at lasting wealth. And if risk management is the outer defense, then learning is the inner engine. Which brings us to the next difference, stagnation versus growth. The most dangerous words I hear from retail traders are, "I've got it all figured out." Because the moment you stop learning is the moment the market humbles you. Burns said it clearly, new traders quit learning when they hit losses, while rich traders never stop studying, journaling, and refining. I once worked with a trader who built a simple breakout strategy that worked well in a bull market. For 6 months he felt unstoppable. But when volatility shifted and the market went sideways, the same setup started bleeding him dry. Instead of adapting, he doubled down, insisting it worked before, it'll work again. By the time he admitted something was off, half his account was gone. Contrast that with another trader I know who journals every single trade. Not just the entries and exits, but her thoughts, her emotions, even her sleep the night before. At first, she told me it felt tedious. But, over time, patterns emerged. She noticed she took bigger risks on days she was stressed from work. She spotted a bias toward buying dips even when her system said stay out. By writing everything down, she turned invisible flaws into visible lessons. And here's the kicker. Research supports this habit. A study of professional futures traders found that those who actively reviewed journals improved performance consistency by over 20% in just 6 months. Not because they discovered new strategies, but because they discovered themselves. So when I hear a trader say they don't need to learn anymore, I already know where their story ends. The market will force-feed them the lesson they refuse to study. Which brings us to the next psychological trap. Because even if you're learning, even if you're journaling, the one thing that can still sink you is ego. The most dangerous words I hear from retail traders are, "I've got it all figured out." Because the moment you stop learning is the moment the market humbles you. Burns said it clearly, new traders quit learning when they hit losses, while rich traders never stop studying, journaling, and refining. I once worked with a trader who built a simple breakout strategy that worked well in a bull market. For 6 months he felt unstoppable. But when volatility shifted and the market went sideways, the same setup started bleeding him dry. Instead of adapting, he doubled down, insisting it worked before, it'll work again. By the time he admitted something was off, half his account was gone. Contrast that with another trader I know who journals every single trade. Not just the entries and exits, but her thoughts, her emotions, even her sleep the night before. At first, she told me it felt tedious. But, over time, patterns emerged. She noticed she took bigger risks on days she was stressed from work. She spotted a bias toward buying dips even when her system said, "Stay out." By writing everything down, she turned invisible flaws into visible lessons. And here's the kicker. Research supports this habit. A study of professional futures traders found that those who actively reviewed journals improved performance consistency by over 20% in just 6 months. Not because they discovered new strategies, but because they discovered themselves. So when I hear a trader say they don't need to learn anymore, I already know where their story ends. The market will force-feed them the lesson they refuse to study. Which brings us to the next psychological trap. Because even if you're learning, even if you're journaling, the one thing that can still sink you is ego. Most traders think they're trading the market, but in reality, they're trading their emotions. I've seen it in countless retail traders. They buy because they feel good about a stock, or sell because something just doesn't look right. It feels like intuition, but really it's just emotion dressed up as analysis. Burns made the contrast sharp. New traders trade on opinions, while rich traders trust systems that give them an edge. And I can tell you from experience, opinions burn capital, but systems quietly compound it. One trader I worked with built the simplest moving average crossover strategy you can imagine. 2 lines on a chart. Buy when one crossed the other, sell when it reversed. No fancy indicators, no gut feelings, just rules. At first, he hated it. He told me it felt robotic, even boring. But that was the point. The system forced him to act consistently, even when his emotions screamed the opposite. Months later, he showed me his equity curve. It wasn't flashy. It wasn't a rocket ship. It was a steady upward climb, bumps, dips, but always higher in the long run. And the best part? He wasn't drained anymore. Because the system made the decisions for him, he could finally separate his self-worth from the outcome of a single trade. Behavioral finance has a name for this: process over outcome. Research shows traders who focus on executing their process, rather than fixating on each trade's result, have significantly higher long-term profitability. Why? Because they stop chasing the dopamine of being right and start building consistency. So here's the last big question I'll leave hanging before we transition. Are you trading your feelings, or are you trading your plan? Because if your emotions are running the trades, you're just renting success. But if your system is running the trades, you're building something you can actually keep. And that shift, from emotion to system, is the foundation everything else rests on. If you look closely at trader blow-ups, the same mistakes repeat like clockwork. Different markets, different tickers, same traps. Take overconfidence. In 2021, during the meme stock mania, I watched retail traders turn a few $1,000s into 6 figures almost overnight. But the same traders refused to take profits, convinced the rocket would never run out of fuel. By the time the hype cycle ended, most of those gains vanished. Overconfidence made them rich for a moment and broke for a lifetime. Then there's loss aversion. A futures trader I knew ran a strategy with a 70% win rate. On paper, it looked like a money machine. But he couldn't cut losers fast enough. Every time a trade went red, he told himself just a little longer. Small winners, massive losers. The equity curve bled lower and lower until the account flatlined. Behavioral finance confirms these patterns aren't random. One landmark study tracked 66,000 retail traders and found overconfidence alone cost them over 6% per year compared to the market. Not because they lack skill, but because psychology ate their edge alive. And that's the real lesson. The market doesn't just test your system, it tests your psychology. If you don't recognize these traps, you'll keep stepping in them until your account becomes someone else's profit. That's why the next step is turning this outward awareness back inward, asking yourself the hard questions that reveal which traps are running your trades. If this hit home for you, don't just nod and move on. Write in the comments and tell us how long you've been trading and what lesson landed the hardest. Share this with a friend who's struggling in the market right now, because sometimes one perspective shift is all it takes. And if you found value here, like the video and subscribe so you don't miss the next one. Remember, most traders blow up not because they lack a system, but because they never master themselves. Don't let that be your story. Master your mind. Master the market. Trade with confidence and live with calm.